Hi everybody, this is Gary dealing with Sentiment Timing, and this is our full free technical video report for Wednesday, August 14th, 2019. The markets got absolutely walloped today. Worst day in 2019, and as you've probably seen, we've had some massive moves in both directions. I think this is the sixth day in a row that the Dow has closed either up or down over 1%. So volatility's here, and that's something that we have been saying. What was that? We're gonna volatility is gonna be here to stay. And with the good thing about volatility is that you could trade both ways. When you get the melt ups that we've gotten from the Fed cutting rates or whatever, that stuff's just boring. There's nothing you could really do. You just sit and watch because you have all your technical indicators that are pointing for a reversal to the downside, but nothing works. But when you get volatility, support resistance works, divergences work, sentiment works, turn dates work. So this is the type of environment that we thrive off of, and you got to sit through these when we get these melt ups like we get, because they last a lot longer than anybody anticipates. So before I get on with the report, this is the last call for the free 2 weeks of the premium video and morning notes. This email was sent out this morning. We've had a lot of you guys that clicked on both of these, but you need to click on the third one to be able to participate in that. I am going to include the link in the email, so you can just click on that and take a look at it. So our predictive analytics model, we've been bearish short term for it really probably it was in June. That's when we got that melt up, but that really doesn't change the overall dynamics of the model, where we had time that was looking down, we had sentiment that was looking down, and we had technicals looking down. So when things finally broke, everything is made sense on it, and it now what we're looking at is where when you get these big moves and you get volatility back into the market, you really want to keep an eye on support resistance and really pay attention to sentiment. So this was our report. We put it out a day early this week because Woody was traveling, but I had left you that I was the dates that we were looking for the actual market to pop into, and what we were saying was that pops were preferred to set up another decline. So this was what we put out on August 6th. And stabs towards the 2940-ish are likely going to be endpoints to the recent bounce. So the interim trend is down, and we have the we know the date that we're looking for this to make a low. But here's the part that where I'm talking about with the time part of it. As noted, it would be great to have some hard pops into 812-ish. Friday may have accomplished that. Now there's room again for the downside. So we got Friday we saw a down day. Then on Monday we did see follow through. But then on Tuesday, we got the announcement that there's a meeting going on with China in 2 weeks, and that gave us the pop to the upside. And if the high came right up at the exact target that I was looking at, right around that 2940. So we knew once we got past the 12th, was that now it's it's time to look to short rallies, and now you start looking for resistance areas. So sentiment, this was when we had that hard drop. We got a 2% sentiment reading that caused a 100-point rally to the upside, and then we made it into our resistance zone, and this was sent out that the sentiment came in at 90% bullish. So that was after yesterday's massive move. So you can see how when we're in a volatile market, the low sentiments usually give pops. High sentiments normally mark the tops, and the low sentiment marks the lows. So this is where I mean that What I mean by sentiment works, technicals work, as well as these dates. So again, what we know right now is that you should really be looking to short rallies into when our intermediate term top date is coming. So members know when to expect this. So even though we may get some massive short squeezes and stuff like that, they should be shorted into when we get that top date. And then we also have an interim low that is looking for into for dates are for members only. We can't give you all this stuff, but the what we're looking for is there's this weakness is going to continue into our next top date. Most likely that's going to be followed by extreme bearish sentiment readings. From there we then get a pop, and then we look for the next intermediate term downturn. So these dates are identified, and this what gives us a little bit of an advantage is because we know how to kind of look at when to be shorting the market, when to be going long the market or covering shorts. And when you have sentiment that's able to back up what we're looking for, that just gives us another kind of peg within the predictive analytics model. So let's go to the charts. This is a fractal pattern that I have been following since we were coming down here, and I picked this up. Now what we had was a 1, 2, 3, 4 big spike up, 5, 6, 7. So this was our 1, 2, 3, 4 down. 5 was up, and this is where I had said that most likely the 2% sentiment reading was most likely going to mark some type of low, because what we were looking for was 6 to come down here, and then that was going to mark the top in the market, and then a 7. So you can see this is pretty much playing out exactly as as this fractal pattern is showing right now. So once this ends, now most likely this is going to come sometime right into that low date, and then we're going to get another move to the upside in the markets as volatility kind of shrinks a little bit. But this is what's going to be pending after that, a massive move, and that's going to be the secondary top in the market that Woody has identified in the interim low. I'm at the interim top, where we are anticipating that we are going to get another big move to the downside. So this pattern has been really supporting a lot of the dates that Woody's been looking for. Now, as far as on a daily chart, we had the bearish divergences. You can see we're right. We closed just below the 200-day moving average right here. Now, what I'm thinking is that we could get a move that brings us all the way back down to these lows that we made in May, and then from there we get a rally, and this will be the low date that Woody has identified, and then from there we get a pop before we get a next move to the downside. And this reverse symmetrical triangle is actually pointing below the December lows, so you can see the target on this is coming all the way down to right around that 2200. So I don't think volatility is going to be going anywhere anytime soon. So this is support right here. I don't know if I would get aggressively short at the 28.23. If we got below it, what I would do is keep an eye on a bounce and see if it gets used as resistance. If it does, then you short it. And again, when we get down to this 27.28 area, 27.20, I would not be looking to get aggressively short, because I do believe that we will get some kind of bounce and most likely look to close some of these open gaps. So that's a big piece of when volatility is around, is that you can't just hang on to a trade, because we've seen that anybody who is long the market just looking for 3,500 4,000 on the S&P watched a lot of gains get wiped out in a couple days. Anybody that was short this massive move to the downside here and was looking for a crash watched all their gains get wiped out. So when we have volatility, you have to realize when you get this low sentiment or high sentiment, you step away from your position, and we still may continue to go down or up, but it's not safe to be in that position. You want to be looking for that reversal, and that's pretty much what we look to do. So the bull bulls, they got to get it back above this 29.38 to get back in control. Short-term bull bear line, I'm looking 28.77. If they get above that, then we may get up here. Downside support is 28.20. We also have some support at 28.01. Below that, I see a panic move coming down to at least close this gap at the 27.47 and probably coming down and testing these lows. So things should be interesting if you're if you really want to know when to expect a low and a top, and when the intermediate term low and top is going to come. Take advantage of one of our specials that we have. And again, if you're looking for the 2 weeks of the free morning notes and video reports, make sure you click on the link, because tonight is the last night for that. And with that, have a great night, and I'll talk to you guys tomorrow.